How's it going, everyone? Welcome back to the crash course. In this video, we're diving deep into one of the most misunderstood but powerful concepts, order blocks. Now, I'm not just going to tell you what they are, I'll show you how to identify them, when to trust them, and most importantly, when to ignore them. So if you've ever marked a block, waited for price to return to it, and then watched it completely to suspect your level, then this video is for you. Let's get into it. First things first, what is an order block? An order block is the last or a series of down or up close candles that confirms the change in state of delivery, which allows you to precisely enter the market at key swing points. They provide instant reactions when you choose the correct one. Think of it as the institutional footprint of smart money. They accumulate or distribute here before launching price to target liquidity. To understand liquidity, check out the first module I have linked in the description. Let's take an example on the chart. This is Euro USD 5-minute chart. As you can see, price has formed equal highs here. Price pushes up, takes out these highs, but does not give us a confirmation. So we wait. And here price moves up higher, takes out liquidity above this high. Now we want to see a break in structure. We have that right here on this candle. These full-bodied candles are your change in state of delivery or your order block. We get a sharp move down and price also leaves a fair value gap behind. This candle right here is your refined order block. As you can see, price takes out liquidity above these highs, taps right into this order block, and then moves lower. Now here's a trick. When price retraces back into the order block, you can either enter right here and just stop above this high, or you can wait for confirmation. There might be another structure shift on the lower time frame or a rejection from the fair value gap inside the order block. That is how you separate the real setups from fake ones. Let's talk about what makes a good order block. There are 3 simple filters I use. Number 1, did it sweep liquidity before the move? If it didn't, the move might just be a retracement and not a real reversal. Number 2, was there an aggressive displacement after the order block? I'm looking for aggressive candle, not just chop. I want to see these full-bodied candles displacing price and preferably forming a fair value gap. Number 3, does the structure align with my higher time frame bias? So if I'm bearish on the daily time frame, I want to see bearish order blocks form on the 1 hour or the 15-minute. If I'm bullish on the daily time frame, I want to see bullish order blocks forming on the 1 hour or the 15-minute. The narrative and context matters here. Without that, this is just a candle. Now let's zoom in into the anatomy of an order block. When price comes back into the block, it can react at 3 different levels. The open of the order block, the 50% of the order block, the wick low or the wick high. Now some traders just use the open, but in my experience, the 50% often gives the best risk to reward. Why? Because price tends to partially fill these areas before expanding away. You're not trying to be right at the top, you're trying to enter with clear logic and control. Let price show its hand before you enter. Now here's a gem for you. The sensitive points in the order block are the 50% level to the high or low of the order block. This is for your notes. All good order blocks react aggressively from this level. Go and backtest this in your charts and you shall find this to be true. Now, where do traders go wrong with order blocks? The biggest mistake is treating every candle as a magic level. Here's the reality. Not every order block will hold. That's why I always emphasize on liquidity first, then execution. Don't mark an order block and wait. Build your narrative first. Is price drawing to a level? Are we in a discount? Was there a liquidity sweep? If these boxes are checked, only then the order block is worth watching. Let's go over a real-time setup. Imagine this. We're bearish on the 4-hour time frame. Now price sweeps an old high during London session, then breaks structure with displacement. We mark the last bullish candle here as an order block. During New York session, price trades back into the order block. And at the same time, we get a 5-minute market structure shift. Now this is your green light. You have higher time frame narrative, liquidity taken, displacement, and an order block which is confirmed with a lower time frame market structure shift. Now this is a high probability setup. To wrap up, here's your quick checklist for trading order blocks with precision. You use high time frame bias to filter trades. You check if liquidity was swept before the move. You identify the displacement after the order block. You wait for confirmation on the lower time frame before your entry. And last of all, you be patient and let the setup come to you. Now I call price and teach in real time to students inside my university. This was the short on Euro USD explained yesterday in accordance with my model. There was also a live stream conducted after where I explained what I saw in detail. You can find more information and join now by clicking the link in the description. If this helped you clarify order blocks, like the video, drop a comment, and check out the next module in the crash course. We're building step by step, and by the end of this course, you'll never trade the same way again. I'll catch you in the next one.